Hello everyone, this is Jeevakan. In today's video, we'll look at what is technical analysis and what are the different techniques to look at if you're trying to technically analyze a stock. So let's get right into the video. So what is technical analysis? We'll first start with an example here. So if I'm trying to push a person, the person moves away. Or if I'm trying to pull a person, the person comes forward. This is due to the pressure exerted, right? The same way a stock moves up or down due to the buying and selling pressure. It's due to the immense cash volume produced by the market. So if there's more buying pressure, the stock moves up, and if there's more selling pressure, the stock moves down. So the point I'm making here is that keeping in mind the historical price movement of a particular stock, future price predictions can be made. This is done by technical analysis. So in order to technical analysis stock, we need to be sure about certain factors in mind. So what are these factors? The first factor is support and resistance. So let's understand what is support here. A support zone is nothing but when a stock comes to a certain range and if it sees some buying pressure, then it is known as support. So in this example, you can see that whenever the stock comes to the range of 100, it is seeing some buying pressure. So this is known as support zone or demand zone. The same way, whenever the stock goes to a particular range and if it's seeing some selling pressure, then it is known as resistance zone. In this example, you can see that whenever the stock goes to the range of 200, it is seeing some selling pressure. This is known as the resistance zone or the supply zone, where there's more supply and people think that the price is expensive and they're trying to sell their shares. And there's something called trend line. A trend line is nothing but a diagonal line. When a stock moves in its course of trend, it comes to a particular range and it touches, and if it goes up or down, that is known as support trend line or resistance trend line. So, and if a stock moves within this range of support trend line and resistance trend line, then it's known as trend line channel. So these four things like support, resistance, trend line and trend line channel are the basic things to understand when you're trying to technically analyze a stock. And the next factor which we need to understand is patterns. So what are patterns? Based on the important support or resistance zones, we will be drawing some shapes which will decide the future price movement of a stock. That is known as patterns. There are many patterns like head and shoulders pattern, double bottom, double top, harmonic patterns which can be used to find the near-term trend. We cannot be covering about all the patterns in this video, but obviously we will be covering about these patterns in the upcoming videos. So for example, we will see about a pattern known as breakout pattern. So what is breakout pattern? A stock will be trading within a certain range for a longer period of time, and at some point of time, due to the immense buying or selling pressure, the stock will either break out or break down. If there's more buying pressure, the stock will break out, and if there's more selling pressure, the stock will break down. This means that whenever there is a breakout or breakdown happening, the course of trend will continue. So this is known as breakout trading. I personally do breakout trades the most. And the next important factor is indicators. Indicators give nothing but buy or sell signals at a particular range. According to my perspective, I would say that indicators are a bit overrated. Because if an indicator can give you buy or sell signals at a particular level, obviously everyone would follow that and everyone would become rich at some point. What I'm saying here is that indicators can easily be manipulated and most of the indicators are not always right. At times it is right. So what I normally do is I don't trust indicators more than 20%, and the remaining 80% I trust the pattern analysis and the price momentum analysis. I don't personally use any indicators, but some of the indicators which I at times use are CPR and moving averages in order to find the short-term trend. So these are the important factors when it comes to technical analysis, guys. So next thing, I'll just share my screen and show you how I locate the support and resistance zones for a particular stock. I personally use TradingView to do technical analysis, guys. So let me open Nifty chart here. Mostly I use 1 day time frame, and at times I use 1 week or even 1 month time frames. So let me set it to 1 day time frame as of now. Let's analyze Nifty chart from 2017 levels to 2022 levels, and I'll tell you how it has behaved. First of all, let's zoom out till 2017. What I'm seeing here is a clear resistance from 2017 to 2020 levels. Nifty has respected these resistance zones clearly, as we can see the rejection here. I mean the selling pressure at these levels from resistance 1, resistance 2 and resistance 3 levels here. And this huge fall is the corona fall where markets crashed like hell. And what happened here is the rubber band effect. I call it the rubber band effect because the faster the markets fell, the even more faster the market came up. People who accumulated at the lower levels here would have made massive returns. But to be honest, it's a scary level to invest because people might fear that the market might fall even more further. Nifty broke out this major resistance zone, and it was a clear indication that the market is going to go up. It gave a clear breakout and a proper retracement at this level, as you can see. So the beauty of breakout is that once market breaks out a major resistance zone, it will never come back to the zone again unless there is a massive fall. As you can see here, Nifty after this breakout has never come back to 13,200 levels. I personally invested a lot of money after seeing this breakout and I made some good returns here. And from here, Nifty started going up, and at this level Nifty was seeing some consolidation within this channel, and after that it gave a clear breakout. Nifty never came back to this breakout level again, and again another consolidation and breakout. So this breakout here at 15,500 to 15,700 levels is the support when markets crashed like anything lately due to the Russia-Ukraine war crisis. As you can see, lately the markets fell from 18,600 to 15,500 levels, and it took support exactly at the breakout level, the previous support zone. Last 1 or 2 months, Nifty never respected any technical analysis zones, guys, because markets were driven by news lately. Because if there is a good news, markets went up, and if there was a bad news, markets crashed down. So markets were driven by news for the last 2 months, to be honest. So now that we analyze Nifty from 2017 to 2022 levels, what might happen from here on? That's a $1 million question here. So I'll tell you that. I'll tell you what I'm expecting. What I'm expecting here is a head and shoulder pattern forming now, and if Nifty goes above 17,600 levels, I will go long and keep stop loss at 16,800 levels, and my target would be 19,500, which means that I'm risking 1,000 points to get 2,000 points. So it's like a 1:2 ratio. So you're risking 1 rupee to get 2 rupees. So that's how you have an edge over the market. So, but I will consider going long only if all the war news subsides and the panic situation subsides. Until then, I'm keeping my positions light, and if in case there is a nuclear bomb launched, Nifty will surely see a massive fall. That's for sure. So this is how I do technical analysis, guys. Before concluding, I would like to add 2 key points here. One is always book profits at round figures. Like Nifty took resistance at 18,500 and at the top here, and took support at 15,500 levels here. So it's not a must to respect a round figure zone, but at times I do it to book profits at regular intervals. So like if Nifty reaches 18,000 or 19,000 or 19,500, I book profits. I expect a retracement or a correction, but it's not that Nifty should correct that region. And the second key point is that always trade in a high liquidity stock like Reliance, Infi, or stocks with more buyers and sellers. But never ever trade with a stock with less liquidity. For example, let me open a stock named Geeta Renewables chart here. So here you can see on the way up there are no sellers, and on the way down there are no buyers. So at times even people get stuck in these type of stocks and might never come out of this level, and they might lose huge amount of money. So that is why you should never ever trade or invest in less liquidity stocks. So always trade in a stock which has high liquidity, where there are more buyers and sellers, so that it will be easier for us to come out or get in as soon as we expect. In conclusion, technical analysis is quite simple, guys, but it takes some time to master it. But if you master it, it will be helpful for you to gain some extra returns. This is how we technically analyze a stock, guys. So now that we know how to technically track the support and resistance zones of a particular stock, can we straight away go and take the trades? Obviously, it's a big no. Firstly, we need to understand what is the requirement and what are the different types of trades which we'll be taking. For that, we'll try to understand what are the different types of traders available in the market. So there are 3 types of traders in this market who use technical analysis. So the first type of trader is the scalper, and the second one is the intraday trader, and the third one is the swing trader. So what a scalper normally does is, a scalper executes the trade within few seconds to few minutes. So what a scalper does is, he buys or sells a particular level and he closes the trade as soon as possible. And a scalper is someone who should have impeccable execution skills. And the time frames a scalper uses is 1 minute to 5 minute time frames. And the next one is intraday trader. An intraday trader is someone who closes the trade within 1 day. He takes the trade in the morning and he closes the trade in the evening. And the time frames an intraday trader uses is maybe 15 minutes or 30 minutes or even 5 minutes at times. And the next trader is the swing trader. A swing trader is someone who holds the trade for more than 1 or 2 days and up to like maybe 30 or 45 days at least. So a swing trader is someone who locates the trend and holds it for long term in order to achieve his or her target is reached, or at least a stop loss is reached. So this is how a swing trader normally works. So a swing trader uses time frames like 1 day time frame or 4 hour time frames based on the requirement. So firstly, we need to understand what type of trades which we will be taking. For example, if you are a working person, scalping and intraday trading is a big no, because intraday and scalping requires more screen time than any other trading. You need to be in front of the system most of the time. So that is why intraday and scalping is much more important, and it requires close monitoring. But some people will be like, dude, I'll be keeping stop loss at the same time I'll be working. I mean, I can multitask. But I'll tell you a small story. Last year there was this small NSE glitch which happened, in which all the stop loss orders got cancelled. I mean, many of my friends personally, they've lost huge amounts of money because they kept stop loss and they went to work. And what happened was, all the stop loss orders got cancelled automatically, and the market was falling down and they were losing huge amount of money. When they came back, they couldn't do anything about it. They lost huge amount of money. So that is why when you're doing scalping or intraday, you need to be in front of the system at all times. And if you're a swing trader, you don't have to be in front of the system at all times. What I personally do when it comes to swing trading is, I'll just keep alert in my mobile phone. Like whenever a particular stock goes above or below a certain range, I'll get alert in my mobile phones. Based on that, I'll react. So some platforms like TradingView or Sensible will allow you to keep alerts at certain levels for a particular stock. So this is how I technically analyze a stock, guys. Hope you all find it useful. Thank you so much for watching the video. Signing off until next time. Cheers.